Can everybody hear me?
Yes, we have, we
Okay.
can hear you, yes.
Okay. Okay. Well, we'll see if we get some more meeting people in a little bit. Just review the agenda, standard methodology. I think this is particularly important during these times of trials and tribulations with the tariffs. Look at our methodology. If you ask, what should I do now? Here's what you should do now. You invest regularly in good and bad markets. That's how you make solid growth over a period of time. You reinvest all earnings and dividends. You buy stocks in high quality growth companies. You diversify your portfolio, different sizes of companies in different sectors. Um, let's go to Partners Report. What have we learned about investing this month?
Good afternoon, good morning. Keep forgetting where I am. Um, this is Ann. I did have an article that I read that I wanted to share because I'm guilty of this, and I don't know if anybody else is guilty that would admit it. But this article comes from Better Investing, uh, volume 74, number 5, and this is the January-February issue. And it's actually an article on page 36, and the article is entitled, Don't Be Dazzled by High Yield Dividend Stocks. So first, I'll confess that I was one of those people that looked at the yield and on dividend and decided that was one of the criteria. But after reading this article by this guy, his name is James Stuckvick, CFA. He says, look at a company's underlying fundamentals and long-term growth potential. Many dividend investors simply look at headline yields to find portfolio candidates. One of the recurring themes of this column has been to highlight how dangerous it can be to blindly snap up shares of high-yielding stocks. Companies with the highest dividend yields, and he gave some examples, and SSP include Walgreens, Boots, Alliance, Verizon, Lyndon Bassel, and he gave some others. He says not to pick on any of these companies, but history would suggest that buying the top 10 yielding stocks in the S&P 500 would ultimately lead to regret. He goes on to talk about some of the reasons why, but and I'll just end with this. Um, the intention of highlighting these companies is to offer a reasonable starting point for further research. Companies growing their earnings and free cash flow, possessing modest dividend payout ratios, and with a track record of strong dividend growth can make for a good foundation when building a dividend-focused portfolio. It can also help investors avoid some of the pitfalls associated with simply buying the highest yielding stocks. So that was my aha from the Partners Report for this month. Thank you.
I will admit my mistake if you're admitting your mistake. I had a small portfolio that I there was a previous concept of dogs of the Dow. You bought the 10 highest yielding stocks in the Dow, a low, highest yielding or highest dividend yield in the stock. And I did that for a few years and it profoundly underperformed what I was doing in better investing. So I admit my mistake with you.
Thank you.
Who else would like to share their experiences? Nobody wants to talk about the tariffs and what it's doing to the stock market. Let's discuss that briefly. Who wants to talk about that?
I will touch on that during my presentation, Randall.
Okay, great. We'll wait for that. That's wonderful. Would anybody else wish to share?
This is Cheryl. It's not that I want to share, but is there an opinion that you can talk about before she does her presentation? Because I look at it as everything is on sale with Ann's point if you're buying. quality companies. If you already have them in your portfolio, it's some of these stocks that we have are holding are a good time to buy because of the volatility and what, it might not be directly related, but everything appears to be almost on sale.
Well, I have two general opinions. Number one, who should know what's going to happen tomorrow with our current president? I have no idea what he's going to change his mind at tomorrow. Number one. Number two, the tariffs could significantly affect the profits of these companies, the earnings of these companies, earnings per share, or they may not. I don't know, but tariffs generally are not good for the stock market in general. But number three is you can't outguess this guy. I would do exactly. I would buy in equal amounts. I would try to dive all in, but I would continue to invest regularly, like we do. Let's say you have a set month you invest. I would continue, and you're right. Stocks are on sale. So anyway, but we can discuss that further after Carmen's probably got a better discussion. I would like to hear her thoughts later on. Let's proceed to the secretary's report. Christian has basically a family emergency, and so he's not available right now. And so I typed up I listened to the recording a couple of days ago, typed up the March minutes report. Are there questions about those minutes at all from anyone? Would someone move to accept these minutes and have a second?
This is Yvonne. I move to accept the minutes.
And I seconded Felicia Williams.
All those in favor, say aye.
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 I want to add that Felicia is kind enough to take notes today. Let's proceed to the treasurer's report.
Brandon, when do we usually get the recordings for the meeting? We get it right after the meeting?
It's pretty within 24 to 48 hours. I only send
Okay.
them out. So,
Okay, thank you.
and so I generally listen to them anyway, but I just type them up because I don't want to get behind in the minutes, and
Right.
it's very nice for Felicia to take the minutes because the minutes don't have to be extensively word for word what we say, so to speak, but just a summary of what we discuss. That's my personal thoughts, and more importantly, what we perform, like what buy and sell we do. I think it's important to be in the minutes.
Okay, thank you.
So this is our positions. Just going to the treasury report, we sold our NICE and purchased 30 shares of Chipotle and 9 shares of Taiwan Semiconductor last month. And so that is reflected in this current portfolio. I guess there's 10 stocks now. And we have currently $89 in cash available to spend. Does anybody have any questions about this report? Why don't we proceed to the vice president's report and see what Carmen has, and I can go further through the portfolio if Carmen doesn't do that. Carmen, why don't you proceed with your report now, please?
I'm presenting 5, but not the portfolio. That is
Okay,
not
okay, I've got that already myself right here. So this is from the iClub. Trying to get this out of my way here. Got something on my screen. Here we go. It shows our stocks. We currently have. We will notice that we have. Ollie has done well, but I'm getting it in my hold of my stock selection guide. Jennifer Haynes, unfortunately, is ill, can't make the meeting today. That's her stock. But this current shares we have, different companies. This is diversification we discussed about small. We have 15%, so we could take it up 25%. We were pretty good. We're right at 45%. Red is 50%. The large is 23 and the mega is 15. So I think we got pretty good size diversification with our stocks. Our that's just another that's in a pie graph. Mid, small, large, and mega with some cash. This is our sector diversification. Consumer cyclical, we have 8%. Financials with Visa and Exos, we have 33%. Ollie's consumer discretionary, we have 19%. Healthcare, we have 7% with Viva. Communications, Alphabet, we have 8.7%, and with tech, we have 22.6% with Taiwan Semiconductor, NVIDIA, and Qualys stock. I noticed both NVIDIA and Taiwan are rather small holdings, just to mention that. So here's our sector diversification. Financial, we're on the high side. We like to keep less than 30%. Combined tech and communication services are right about 31%. And here's consumer defensive and health. Sectors not represented. Frequently, these are not high quality growth companies, basic materials, real estate, utilities, energy, and industrials. Not that there can't be some, but they're generally not in that category. So why don't I stop sharing and let our vice president proceed with her report? Let's see. Carmen, you're muted current. Oh, there you
go. So I'll be presenting on 5. Let me open my. Can you see my screen?
Yes, we can.
Okay, perfect. So good morning, everyone. I'll be presenting on the results of Five Below for the fiscal year 2024 and its last quarter at the end of January 2025. Five Below is in the consumer cyclical sector, specialty retail industry, and offers merchandise targeted to the tween and teen demographics. It's a medium-sized company, and its fiscal year ends in January. For the medium-sized company, our desired growth rate is 7 to 12%. Looking at the history of the company, sales have grown 19% as well as its earnings per share. This is a good example of organic growth. Looking at the management section, the 5 years average seems to be reasonable for a retail store. So historically, the company has performed very well. But let's go and check the quality of the company, what stands today. So the quality test number 1 is, are the lines up, straight, and parallel? The company has grown on average 19%. But let me enlarge the last year performance. So are the lines up, straight, and parallel? I would say not sure. And you can see that the dots of the year-end performance are below the trend lines. That tells me that the current growth rates for sales, pre-tax profits, and earnings per share are declining compared with its history. Sales and earnings per share are no longer growing at 19%. So let's go and check the test quality number 2. The desired growth, we said that is 7 to 12%. According to SSG data, sales were growing at 4% last quarter. And we'll talk about that later a little bit. So I would say that really, I'm not sure what's going on with that thing. But earnings per share have declined 7%. Looking at the year-over-year data, sales have grown 8.9%, which is our desired growth rate, but not earnings per share. And the 10-year average growth, again, is 19% for sales and earnings per share. So for test quality number 3, I think we need to take a closer look at the data before making any judgment. So let's look at pre-tax profit on sales or profit margin. Five Below is above its peers and competitors, even after last year's data. So I'm happy with that performance compared with the rest of the peers and industry. The pre-tax profit percentage change, or the torpedo graph, is showing 4 torpedoes. Return on equity dropped to 15% from an average of 20%. However, a 15% return on equity is very good. It's above its peers and the industry. Debt to capital, it's above 33%. However, from the graph, you can see when the changes in accounting took place and leases had to be part of debt. And there is not interest coverage for the company. This reflects that the company has no debt, so management is doing a good job overall. That's my opinion. I want to show you this graph. So you can see how cyclical and consistent the company is regarding its profit margin. You want to find companies that are steady trend, and in this case, the only outlier is during COVID. So following the trend, I'm expecting that profit margins will decline, but it's part of the business cycle of the company. On March 19, the company provided its results for the fourth quarter of 2024 and fiscal year 2024. And remember, we have a desired growth rate of 7 to 12%. Notice that the company mentioned that fiscal year 2023 has 53 weeks. And if they exclude that week for the comparison, sales growth 8% for the last quarter and 10% year over year. So that will be within my desired growth rate. Looking at the year-over-year data from our SSG, I compare the sales increase for the company are the same, an 8.9%. This includes the 53 weeks from 2023. So my question is, what is Five Below doing that is no longer its earnings per share are growing at the same rate? What additional expenses are being incurred that made the profit decline? So the company is telling me that they opened 227 new stores, which makes the operating income decline 61 million or 16%. Taxes are about the same, and net income was reduced by 47 millions or almost 16%. The company repurchased 267,000 shares in fiscal year 2024 for about $40 million. The company provides guidelines for 2025. We can expect that sales will be in the range of 905 to 925, and they will open 50 stores and a flat to 2% increase in comparable sales. Net income is expected to be in the range of 25 to 31 millions, and earnings per share in the range of 44 to 55 cents. And in this outlook, the company does not include the impact of shares repurchase, if any. For the full year, fiscal year 2025, the company is projecting sales growth of 8.5 to 11.5%, which is in our desired growth rate. They're expecting to open 150 new stores and assuming a flat to 3% increase in comparable sales. Consequently, net income will decrease in a range of 15 to minus to 1.4%, and earnings per share will also decline in about the same range. So I was intrigued, and the other thing is the gross capital expenditure are expecting to be 210 to 230 millions in fiscal year 25, and this outlook doesn't provide any impact on repurchase shares, if they do any. So what I did, I went to Perplexity since AI is so become a trend in our community, and I was intrigued about tariffs and Five Below. So my prompt was very simple, and I said, will Five Below be affected by tariffs? And they gave me a good summary. They said Five Below is significantly affected by tariffs due to its reliance on import goods, with approximately 60% of its total goods coming from China, either directly or through domestic vendors. The company anticipated seeing the impact of tariffs on fiscal in the second quarter of 2025 and has implemented mitigation strategies, including selective price adjustment, diversifying sources, and focusing on product innovation. So despite this challenge, Five Below remains optimistic about its growth, projecting a 3% increase in comparable sales for 2025 and plans to open 150 new stores. However, the company acknowledged the dynamic nature of the situation and continues to refine strategies to minimize tariff-related impacts. So I keep asking Perplexity, so what specific strategy is Five Below using to mitigate the impact of tariffs? And they give me an answer, and they have 8 sources. So it says that Five Below is employing several strategies to mitigate the impact of tariffs, which have significantly affected the cost of structure due to heavy reliance on imports from China. These strategies include vendor collaboration, selective price adjustment, diversification of sourcing, focus on products innovation and trends. These mitigation offers are expected to reduce gross margin to approximately 100 basis points in fiscal year 2025, but they reflect a proactive approach to managing tariff challenges. So I keep asking Perplexity, so what do I do in a downturn? And they gave me a very reasonable point to follow. So I was reading that they say, stay invested for the long term. Avoid panic selling, as this locks in losses, historically markets recover over time, rewarding those who remain invested. Review your portfolio to ensure it aligns with your risk tolerance. That's a DBI way. Second, diversify your portfolio. Spread investment across asset classes like stock, bonds, consumer staples to reduce risk. Diversification can cushion losses during market volatility. That's one of the principles of BI. Then consider buying the dip. We were talking about that at the beginning of the meeting. Market downturns can present opportunities to purchase quality stocks at lower prices. Use dollar cost averagings to invest consistently, regardless of price fluctuations. And the last one is focus on defensive investment. Invest in dividend-paying stock or sectors like consumer staples that tend to perform well during recession. And that's no other than what we talk about rebalance portfolio. So I was looking for the price, what's going on with our stock. So I can see that the last year, the stock underperformed and the price have declined more than 50%. But I have to remind myself that if I sell at a loss of 30%, it requires a 43% return to break even. Or if I sell it to a 50% loss, require 100% return to break even. So I keep looking for information, and I found this graph that I thought it was interesting. So it defined, Investopedia defined bear market as a condition in which security price fall 20% or more from recent highs and widespread pessimism and negative investment sentiment. I also found this graph that I think is relevant, that how long they last. And I can see from the graph that during bear market, you can see going down in negative territory, but the length is not significant compared with the bull market. This is historically though. So we'll see what happened, what the history will tell us. The other thing I found that Motley Fool described the bull versus the bear. So the bull is optimism. The market rise 20% after 20% falls. That I thought that was interesting. The economy is expanding and the average length is 7 years. When in the bear market, pessimism is the main factor. Markets falling 20% from the recent highs, economy is contracting, and the average length is 1 year. So is anybody have questions? Please do. If not, this will be the end, the presentation.
That's very well said. Very nicely done, Carmen. There are basically two specific subjects you discussed. Number one, specifically the 5 below stock. And number two, what to do in a bear market that we're in currently. I think Better Investing also has the rule of 5, as we've all discussed before. In 5 stocks you purchase, 1 will exceed all your expectations. 3 will do what you'd expect, and 1 will do very poorly and needs to be sold. And I personally believe 5 below, before the tariffs, the last year has done very poorly. I personally used to own it. I've sold it in the last few months because it has all those torpedoes that you've demonstrated. And their profits have been going down consistently over the past year. They've had different excuses. They said, well, it's because theft in the stores, and they put in, supposedly they said they were going to put in security measures to prevent this, but they keep on going down. And their thoughts for next year, the profit's going to continue to go down. So, I mean, I think this is no longer a Better Investing stock myself. But I want to hear what other people have to say. But I do completely agree with your purchase stocks during bear markets. Those will be your best buys. A lot of times they'll get lower, make you sick to your stomach. But just hold on, buy high quality stocks. But anyway, go ahead. Who else wants to discuss this very nicely done presentation by Carmen?
I just want to say, very nice presentation, very informative. It also aligns with what we're talking about in our education segment today for our presentation for group 4, but very informative, and I'll cover some of the same stuff when I get to present today.
Yeah,
Very good.
hi, Mariama. Good morning. Thank you, Carmen. Very, very nice. I loved it. I was a bit puzzled by Five Below's prognosis for the future, with a tariff ranging from 125 to 145, possibly going up or more, and a sector that's not been given any exemption. So I was kind of like, now how do they manage to still project those kinds of possibilities in a rapidly changing economy? So I'm slightly skeptical around some of the projection, given where we are.
Yeah. One thing that we need to take in account, and that was presented last time we did 5, is the beta of the company. This company is very volatile. So, because I'm surprised that sales are growing at the expected growth. Now, we know that at least probably a year or more ago, they went to an expansion plan, and they said that they're going to open several stores. And if you open several stores, of course, that will make the profits decline. We still have positive earnings per share. It's declining, yes, but I have the hope that you can see the numbers of stores are planning still opening. We'll see what happens in a year from now, how many they will report. But I was impressed that considering all the macroeconomic going on, they still are expecting to open that many stores.
One more comment I would make is when you look at retail, the main factor one needs to look at retail is same store sales. Same store sales is defined as sales in stores that have been open for more than 1 year. And you look at same store sales as the main metric to look at. And when you had a metric that was down 2.3% last year in a booming economy, it was down 2.3%. And the next year, these projections 0 to 3%, those are poor. I mean, that's the metric you look at retail. What are the stores selling? They're selling more. I mean, they're selling, and that's not even down 2.3, and 0 to 3% is basically at the most inflation rate. So they're not even projecting to sell more toys or retail this year. It's just not, the company's not doing well, but it's a small portion. We can decide later on in whatever general discussion if we want to hold it or if we want to purchase more, if we want to sell it. Anyway, but I think it's a very nice presentation. I looked at it this morning too, and those torpedoes you see, in their earnings are quite worrisome, just like you demonstrated. Anybody else? Okay, let's go back to my PowerPoint.
Excuse me, I couldn't come off mute fast enough. I just wanted you to know that this was a very interesting conversation. I don't have any real input. I just wanted to know, I thought this was great.
I completely agree with everything you said. So here are the stocks we're going to review today. So, Carmen, you have Axos prepared?
No, Axos will be after they release the next quarter data, which is not until at the end of the month.
Yeah, but we have it scheduled the way it's scheduled. But anyway, that's fine. That's fine.
It was changed. Talk to Jennifer about it. She sent a couple of emails about it.
Okay. So this is what if we're going to change it, I'm the one that types out what's going to be done next month, and I sent them out like a week before to make sure we do it.
I replied to you, and Jennifer wrote to you. So
okay, maybe Jennifer has to give me a new a new data sheet on when we present these stocks. I don't care when, but maybe we need to change it. But we'll move on. Yvonne, are you prepared with NVIDIA?
Randall, I'm sorry to disappoint you today. I was so focused on the Group 4 presentation, I forgot about NVIDIA. May I please be forgiven and I can do it next time?
Oh, certainly, certainly. I think Jennifer is ill today. She texted me earlier. Let me. Oh, that's the wrong thing. I don't want to do that. What did I do there? Let me just go to our. This is our portfolio. We look in Ollie's over here. Ollie's is interesting stock. I looked at it earlier. They've done reasonably well coming out of 22. Last quarter, though, their earnings were down nearly 10%. The earnings per share recommendations, they're going to go up 15%. At least that's what I have as their projected earnings per share growth. Pre-tax profit remains stable. Return on equity is on the low side. 12% is less than 15%. Debt to capital is low debt. So that's one thing I've been worried about. It seeing they have our return to equity on this stock is below 15%. The other thing, the stock is currently at 111 with a current PE of 34.7 versus a 5-year average PE of 27.1. And this stock, if you look in the graph here, it's well up into the hold range. I mean, the stock has done well and it's currently selling at a pretty high price compared to its past history.
Excuse me, Randall,
Yeah,
we don't
yeah.
see any graphs or anything. I don't see anything on the screen.
Uh-oh. You don't see anything?
I see the secretary's report, but that's it. I don't see anything. I'm sorry to interrupt, but I don't see anything.
No, and I'm glad you did. I have to share. I have to go to different. I'm glad you did. Sorry. Can you see it now?
Yes, I can see it now. Thank you.
I'm glad you brought it up. So the current PE is 34.7. The average PE is 27.1. Current price is 111, almost 112. 52-week high is 120, 52-week low is 70. So sorry, but here was the graph I was showing earlier. It's solidly in the hold range. So the projected return at a high PE going forward is about 8%. So this is a stock that's done reasonably well. It's moderately high priced. It's a little bit more than moderately high priced right now. And that's my knowledge. And look in the quarterly data. The earnings per change is still good, but it's less than it was before coming out of a bad year or two here. But it has been dropping. I noticed the last quarter is only up 10.6%, which is retail's the main quarter of the year. Is the winter quarter. Includes Christmas, where they have that large part of sales. Any questions on Ollie? If not, I'll proceed with Taiwan, which is another company I have. So Taiwan Semiconductors basically hitting every pitch thrown at it so far. Now, semiconductors is slightly cyclical, so it'll go up and down a little bit, but it's pretty solid growth the last several years. Morningstar thinks earnings per share will grow up nearly 15% per year, and sales at 20%. The numbers I use, sales at 15 and earnings per share a little bit higher at 16.9%. And that's in line with value line. I had the value line, and the value line is very strongly positive on this stock. I was amazed their profits went up 53% this quarter. That's just amazing. They're getting a lot of traction with people don't know Taiwan Semiconductor. They're basically the major actually manufacturer the semiconductors. Like NVIDIA will develop a semiconductor, but the manufacturer is Taiwan Semiconductor. I think they produce like 90% of the high level semiconductors. Return on equity last year was 29.8%. Debt is very low. Now, we bought it last month at approximately 170, and with all the tariff situation, the price has gone down to 151. Now, directly related to the tariff situation, about a week ago, Trump said, well, we coming from China, we're not going to go for the electronic companies like Apple software, and I would assume they would include this. But it'll still be taxed, I think, 10%. But nonetheless, they took the huge taxes off of these type of companies. It's to my understanding. The current.
Did he say that was supposed to be temporary at least? That's my main, the uncertainty that.
Yeah. What? Okay, go ahead. I'm sorry.
No, I'm just wondering. I thought it was a delay more than a fact.
Yeah, I saw.
I'm not sure.
Yes, I heard it was until July. It was temporary restricted.
My opinion of anything Donald Trump says is temporary. That's what I mean. He jumps on around. Who's to know what he's going to say tomorrow? I have no idea. But you're right. I think you're absolutely right. It was using it saying you got to come to the table before July. So that was temporary. Nonetheless, everything he says is temporary. Their current PE is 19. 5-year average PE is 21, making it a significant bargain now. With a high price of up to $424 in the next 5 years. And if you look at this chart's interesting. This chart, it's deep into the buy range now. So I would say, and the projected annual return to the high P is 25, at the median P is 20. I think Manifest, which compares to this, is like 17.5. So anyway, this is a high quality company. I don't know what tariffs are going to do. I don't know what tariffs can do anything, but it's a good overall buy. And I would favor adding more to it if we wish at the end of the meeting. Okay, well, let's go back to my agenda. I'm sorry, I have to switch between the computers because my I wasn't able to print anything out yesterday because, as I said, I'm not home. I'm in Georgia. So, Mariama, did you prepare Technoglass? Mariama, are you there?
Yes, I'm here. No, I did not. Sorry. We want to get back into my screen here.
Okay, I mean, maybe y'all can now, let's try to discuss how can I communicate to y'all better that these stocks, a new SSG is probably the easiest way of doing it, can be prepared so we can present at these meetings. I mean, y'all tell me. Because I think the idea that Jennifer developed is a good idea, that we review these stocks, and since we have 10 in our portfolio, and I think approximately 6 or so in our watch list, that means we present 5 or 6 stocks on the monthly meeting, a quick review. But I don't know. I'm just asking. I emailed out a week ago to the presenters, so I don't know. Well, anyway, I guess I will discuss that with Jennifer, see what thoughts she has. But why don't we proceed to the group 4 presentations now? And I will stop sharing.
Hello, everyone. My name's Yvonne McNaughton. I'm with the Group 4. Today it'll be Felicia and myself presenting. I will present a new stock study, and Felicia will do this education segment. So Felicia, go ahead. You start.
Good morning, everybody. I'm going to share my screen. It's not acting properly this morning, so I'm going to, let's see, lay out some options. Okay, so I guess I should have video first. The name of the video is Sensible Investing in Chaotic Times. It aligns with what's happening in our society tonight, right, with the tariffs. Let me see if I can get the video, share sound. Yeah, see my screen?
Yes, we do.
Okay, so we're going to start at, I believe it's 32:19. We're going to start and we'll play 5 minutes of it.
We have an advantage in the market that we can take advantage of opportunities and build that return later than that, above those levels. All right, let's go on and talk about some particular strategies for chaotic markets. I'm seeing some questions, more related to what do we do now? What if we're not ready for retirement? And but yeah, we've got short time frames. So let's talk about what sensible investors might be able to do with the in the current situation. Certainly, Better Investing's 4 principles always apply. There's no asterisk that says these 4 principles only apply during particular market cycles. No, Better Investing principles apply to all cycles. 1, invest regularly in stocks. 2, reinvest all of your earnings. 3, buy stock in high quality growth companies. And 4, diversify your portfolio. Those principles remain true today, and we have opportunities to focus on number 3, focus on number 4 during market downturns and pullbacks. Don't dump your stocks. Hopefully you have not unloaded your portfolio, especially not in panic. The market could recover again. The market last week, as we were planning this webinar, all of a sudden popped up, had 5 or 6% gain days, and those types of gains it would be a pity to have missed out on it because you sold out of fear. And if you're thinking, well, I could move to where you're going to go, cryptocurrency, real estate, bonds, gold, precious metals, commodities, all of those segments have uncertainty about them that's perhaps a little more elevated than it would have been last year at this time. And certainly sitting on cash, if you miss that next market move up, then you're going to be feeling regretful. So we hold on. Investment clubs should be holding and looking for opportunities. The emotional aspects of investing are also something that we as individuals need to confront in our own personalities and understand these feelings that we get. On this graph, it shows what happens when we're in bull markets and bear markets, the feelings of optimism and enthusiasm and euphoria that precede the peak of a bull market, and then the sense of unease and denial and pessimism and panic and capitulation and despair that lead us into the depths, the troughs of the bear markets before we start to see recovery and hope and relief and then optimism once again, right? Those are all natural emotions that it's important to acknowledge. And if you feel like you're becoming overwhelmed by the market, keep in mind that this too shall pass and the cycle will continue. But if you jump off the roller coaster at the wrong time, you're likely to hurt yourself, and your portfolio will suffer in that scenario. Not the market. Well-managed companies can continue to perform over the long term. Capital appreciation will follow great businesses and growth.
Okay. Am I still sharing screen? I'm trying to get to the PowerPoint I presented for you guys. Can you guys still see my screen?
No, I don't see anything.
Okay, share. Okay, so I can't get to full screen for some reason today, but the once again of our article is sensible investing in a chaotic time, and I think it applies greatly for what we're going through right now as a society, as a club, and I think it's great that we're going through this together. So we don't have to make decisions, at least in our club portfolio, by ourselves. Sometimes it's a scary time. We do it, in our own portfolios, but as a group, we can come together and, make decisions of what we believe, what we know to be the right things to do. Okay, so this is group 4. It consists of Yvonne, Christian, myself, and Morena. So as we know, new tariffs on April targeting all U.S. trading partners worldwide have created market uncertainty and the volatility with major market indexes falling in correction or even bear market territory. The slideshow or the video was by Doug. It shows how investors should react in these chaotic times. So first thing I want to remind everybody is what is a tariff, in case you didn't know. I know most of us do know, but it's like basically tax from when you get stuff from country to country. So it's going to be increased to try to get the country back on track. But does it work? We don't know what the future holds, as Randall said earlier. We're going to go with what we know is to be true by doing our investing strategies that we know from Better Investing. So think of it as a price increase on imported products. So what happens is the importers pay the tariff. And now this is going to vary from country to country, depending on the goods, the arrangements, and the agreement that the country have with us. Okay, it's going to impact the prices. Okay, it's never to be, we don't know it to be a good thing, but it's the reality we're facing right now. So tariffs increase the cost of imported goods, which can be passed on to consumers in the form of a higher price. So as you know, everything is going up now. Food, clothes, cars, everything is going up. Now, tariffs can act as a form of protectionism, making it more expensive for foreign goods to compete with domestic products. And then there's the trade wars that we try not to, get into the wars with the different countries. Now, we know we go over every month when we have our Better Investing strategies, and they always apply. Like he said in the video, it doesn't matter what's happening now, we still apply our principles that we know to stand by. Invest regularly, reinvest our earnings, and definitely buy stock in high quality growth companies, and we keep our portfolio diversified. Now, we have to maintain a defensive exposure. I heard Carmen discussed that earlier. And stocks and utilities, non-cyclical, consumer goods, and healthcare industries are the best holdings during these turndowns. Now, they can be expensive to buy when conditions start to deteriorate, but we need to confront our fears. Okay, so we have the bull markets, we have the bear markets. And sometimes we need a reminder that we have to go through these things. One thing I know that there is no blind faith. So this is where the club and the partners come into play. That we invest, we have our presentations every month, and we know what we're doing. We do our due diligence and looking up different stocks. And now, let me see. And it's almost like, investing sometimes can also be like insurance, where you don't need it until you definitely need it. So we have to definitely pay attention to what we're doing. And we want to now take time out to advise us to challenge our current holdings. So what we have now, we're going to challenge what we have. Okay, so make a list. Make a list of what we want to have, what we do have, a watch list. And we're going to make sure that we have it on the list and we do it when the price is right. So we look at it as this tandem here, where we have the bear market and the bull market, and then we have it like rocking from side to side, watching each month. And if it gets to that place, sometimes it's undervalued, then it gets overvalued. When it gets right there, when it's reasonably valued, that's when we take action. So that's why it's important to watch it every month and know what we're doing and know when to actually take action. And as we saw earlier, and I think it was on Carmen's presentation, you look and see it doesn't last forever. You know, it doesn't go on forever. So normally the bull market always, you know, would take precedence over the bear, but we have to just stand fast. Let me see. So this is how we have to be what they call tax smart. So we're going to harvest our capital losses. Make sure we consider Roth IRA conversions, and then also increase any contribution as possible. So we can't really get directly into the stocks. Make sure we focus on those IRA and those 401k increases and make that very prevalent right now and let that money go there so we're not just losing out. And if you're all changing and you have a good company, stick to that company. So let me see, talk about the tax smart. Get almost done. And just keep in mind as a club, that wealth is made during the bear markets. That's when you really become wealthy. So it's not like get scared, jump off, you know, start selling everything. But we want to remember that wealth is made during those bear markets because you're getting invested in stuff that's undervalued. So when stuff is undervalued or whatever, that's when you buy it. So you have it. So when it goes up, we already have it in our portfolio. Okay. I'm not sure about this question, but it talked about monthly contributions possibly going up. If it's allowed in the bylaws, I know that's something that we're interested in as a club, but it was mentioned during the video, so maybe we can discuss that later as a group, just to invest a little more if it's a good time to do that. And this know that when the market recovers, investments may show bigger gains. And you can't get with it right now. Just think about the future and focus on what happens in the next 5 to 10 years. Think about 2030, where we'll be if we keep investing and keep standing fast and keep making great decisions. And that's pretty much our presentation from Group 4. Myself, Marema, Yvonne, and Christian. Does anybody have any questions?
That's a very nice summary, Felicia.
Thank you.
I can't agree with you more. Let's just not get nervous. People say good, better investing investors are like Spock. They don't have emotions. Like Spock on Star Trek, you just, prices are down. This high quality stock. I think I'll buy some. I mean, that's the way Spock would say it. And I can't agree more with you. And your presentation is very nice. Anybody else have comments?
Thank you.
Okay, so I'll do my segment. Well done, Felicia. You made me have to rise to a higher level. So I'm going to present a new stock. I'm going to share my screen. So you should be able to see my presentation. Let's get this party started. So I'm presenting today on United States Lime Minerals, Inc. It's in the basic sector, and this is Group 4. So to get started, we looked to see what sectors were not represented in our portfolio. And we looked to see that our portfolio has 15.2% small companies. And these are the sectors that were not represented. As you can see, we selected basic materials. But in order to select it, what we did is we went first to the BI Stock Ideas screen. We used one of the predefined screen for the small company. And on that on that list, there's only one company that is in the building materials industry or sector, and that is United States Lime. So we reviewed that one. What does this company do? They manufacture lime and limestone products, and they supply it to construction, industrial, environmental agencies, for metals, roof shingle manufacturers, agriculture, and oil and gas industries. So they have a specific group of individual or companies that they provide to construction. And of course, this is a cyclical industry. They're located in they're located in Texas, and their plants are located in the surrounding states, Colorado, Arkansas, Iowa, Kansas, Louisiana, Oklahoma, Tennessee, etc. And so all of their products are also sold very regionally. They only have 8 salespeople. It's a very small company. They have 8 salespeople that go door to door and make their sales. So when I pulled up the SSG, this is what I saw. And what I saw was that they look pretty good. But before I went any further, I know nothing about this company. I wanted to see what their peers look like. It's a small company, so none of the analysts follow it. So when I went to CFRA, I noticed that they gave me some peers. So I looked at CEMEX, Eagle Materials, James Hardie, Knife River, and Smith Midland. So I went to look at the SSG for each one of these companies, and I compared it to the SSG for United States Lime. And so here we have CEMEX compared to Lime. I think Lime looks good, looks better. We have Eagle Materials and compared it to US Lime, and they still look better. I look at James Hardie, and I see red flags. The long and short of it, for all the ones that are peers to this company, I see red flags where I don't see any in US Lime. So I continued on, and I looked at it, and I evaluated the picture, right? It is, the lines, are they up, straight, and parallel? Yes. They had historical average growth, sales growth, 14.9%. And the average EPS growth is, I wrote that wrong. It's 31.2%. Their return on equity is 16.6%. And that's higher than the guideline, as I understand it, that it should be at least 15%. So that looks good. And they only have 1.2% debt, which is very low. That I thought was excellent. Also, when I looked at their year-over-year sales and earnings per share, they had 21.9% year-over-year sales for the quarter, and for earnings per share, it was 57.7. I thought that was pretty good. So as I observed it, I noticed in 2022, revenues increased 12.9%, and this was due to an increase in average selling price offset by a decrease in sales volume. That to me was interest. The decrease was in construction companies, which is a cyclical industry, and it's impacted significantly by the weather in the summer months. Gross profits increased 40% from the increased revenue. And so I wondered, how could they increase their prices and not lose more sales? And it turns out that this company is relatively inelastic, meaning that changes in price does not lead to a proportionately lower change in sales. And so it allows the company to maintain or increase revenues when prices rise, as customers are less sensitive to those changes. The customers of this company will buy the product even though the price will change. So because the company is not covered by any of the ones that I recognize, like Value Line, Morningstar, or Yahoo, or others that I can decipher, I went to our member sentiment. And in the past 90 days, 95 clubs had completed studies on this particular company. In selecting which sentiment to use for the sales, I selected the median. And for the earnings per share, I selected the median rather than the mean. So you'll see that or you saw that back earlier. When I did the analysis, I selected 10% for sales and 19% for earnings per share. Moving forward, we're looking at the price earnings history, and I eliminated the highest high PE and the highest low PE. One of the things I noted is that the current PE ratio is 24, whereas the 5-year average is 16.5. I was a little concerned by that. However, what I did notice in the ratio tab, it shows that I think it's the beta is 0.9, so they're less volatile than the market. In selecting the high price, I used the average 5-year high PE of 21.3. And then for the low PE, I selected to use 80% of the current price, which is one of the options. We could either use the low price or the 80% of the current price. So I selected the 80%. It turns out that at $91.76, the company is in the buy zone. The high price would be 192.6 and the low price $73. It has a 5.4 to 1 upside downside ratio, which I think is reasonable. I think our goal is 4 to 1, but 5.4 to 1 I think is good also. The company pays a small dividend, which is not significant to their annual return, and the annual return turns out to be between 10.7 and 16.4%. So as I looked at everything together without being absolutely adamant that this is a buy, I think this is a buy. One of the things we're looking at is the current economic situation where we are in with the tariffs and the uncertainty related to that. This is a U.S. manufacturer, completely in the United States. The customers are exclusively in the United States, so I don't think tariffs should directly impact the company in a negative way. It's a small company. We only have 15.4% of our portfolio in a small company. We do not have any company in the basic materials sector, and the company seems to be well managed, as shown in the fundamental data in the SSG. So one of the things I wanted to just go over is just to show you what it looked like, the actual SSG. And at this point, I have to ask, so one of the things is I learned that the price is inelastic, meaning that the price doesn't change significantly. The sales do not change significantly when the company increases their price, and their beta is a 0.9, which means it's less volatile than the market. And so I think it checks off several of the things that we're looking for. Are there any questions or concerns?
Yvonne, I'll speak up. I think this is a wonderful presentation. I think there's several things you've done very well. First, using the stock screener. I mean, I think as we use a stock screener, we're going to be doing much better. I mean, that was very well done. And you picked a stock in areas that we don't have, basic materials and the small companies. But I mean, this is straight and parallels as you can get. I mean,
Yeah.
that's what I'm seeing. And I agree with you. It checks all the boxes. Debt's low.
And the low debt.
Yeah, return of equity is good. Yeah, everything looks good.
And what you said earlier today was that it's very difficult to find a good company in this sector. There are not many small growth companies in this sector.
You proved that it can be done. I mean, I would agree with you, but do they? Of course, the concern is if you have a recession, would they have do you think there'd be much a decrease in their sales, or is it not cyclical? I'm just curious what your thoughts are on that.
It is a cyclical company because they supply the construction industry, real estate. However, they have other supply people who they sell to. So they sell to people who are building highways, and they do shingles that produce shingles for roofs and metals. They do water treatment facilities where they purify water. So they are in the oil and gas service industry. They supply these materials to those industries. And so because of that, they have, when one area is down, they have others that that they can still sell to. The other thing I noticed is that last year they raised their prices a good bit, and they had lower sales, but it was only 1% lower sales in construction compared to, like, I think it was a 30% increase in revenue, because as a result of increasing their prices.
I see Cheryl Carter's raising her hand. Do you wish
Cheryl,
to
would you like
comment?
to ask a question? Oh, it was a 12.9% increase in revenues. And they increased their selling price by 14.2%. So Cheryl, would you like to ask?
Yes, I would like to. Yvonne, this is great because I have been following this stock and trying to figure out how to buy it as well. So how did you compare it to Eagle? Because our club had Eagle and got rid of it. And and that was one of the companies I compared it to when we bought Eagle. And I was like, man. So I'm glad to hear that somebody else is looking at this because I have it sitting on my list to buy. But how did you determine, because Eagle Material is in a similar sector, and I'm trying to understand what you did when you looked at both of them, and how did you decide this now is it price point?
I didn't look at the price. I didn't go in depth. I looked at the picture, right? I looked at the historical sales. So historical, and I put up, if you can see this shared screen I'm sharing, where I compared the graphs of the two companies. So in terms of Upstraight and Parallel, Eagle Materials was lower. I mean, it didn't seem to have the same growth trajectory. In addition, the last 3 quarters seem to be trending slightly on the downside. When I look at the historical sales, they had lower historical sales growth and lower historical earnings per share growth, and they have 49% debt compared to this company. So that's really what I was looking at. When I looked at Eagle Company also, if you look at their recently quarterly sales, it decreased 0.1% on sales and decreased 4.3% on earnings per share. So when I looked at it, I just thought US Lime looks much like a much better company in terms of management.
Okay, so it's based on the last. Yeah, we got rid of ours
Yeah.
because not that it didn't do well, because it did extremely well, but I also found this company and had been toying to say, oh well, maybe I'll bring this to the table as well because I am putting it in my portfolio.
Yeah, this one I think looks good. It's hard to find a company in this. These are not growth. This isn't a growth sector, but this is a good company. It's small and it's growing, and I think it would fit in our portfolio. Any other questions?
Well done, Yvonne.
Thank you, Carmen. I'll send it back to Randall.
Okay. So, I mean, I want to congratulate the club members for presenting stocks the last few months. Going to the stock screen and finding stocks, we're looking at a much better pool of stocks. And Yvonne is a perfect example. And that's been going on for a few months. So I want to encourage everybody in the future is presenting stocks to do the same, to go through the BI stock screener and decide what you wish to look at. And this is very well done. So now I think it's time for us as a club to discuss what we wish to do. And that would include possibly sale of stocks, possible purchase of stocks. So first, let's discuss if we want to sell any stocks. I will go to the portfolio and want to entertain. I mean, I think Carmen did a very nice job looking at Five Below. I've expressed the opinion that I think we should just sell out this and take the money and move on to a better stock because it is not meeting the principles of better investing. But I would welcome and wish for other comments on that. Let's not be bashful, everyone.
So are you asking us if we, as a club, think we should sell that?
Yeah, I think that's one open. I mean, I think that's an open. We should consider selling Five Below, or that's my personal opinion. One could also say we could trim a little bit of our Ollie. That would be another second opinion. But I think we have to decide. I mean, if the club does not wish to make any sales, I think that's fine. But I think we have to consider a stock which is coming out of is not performing to better investor principles. That's why I'm bringing it up. But the members have to decide. So that's why I want a general discussion first, if we want to make an motion or if not. I mean, that'll be up to the club, not up to me.
Can we hear from Sophia, the presenter? Thoughts? Your thoughts?
Carmen?
Carmen.
Carmen, what are your thoughts?
About Five?
Selling.
Yes.
Selling the stock you presented on Five Below.
I really don't know what to do because I mean, the company in terms of sales is performing. And they also told us that we'll be expanding the stores, which they're doing. So that's why the decline on earnings per share. Now, the beta for this company is high, so everything that happened in the market or with the company, price goes down. But I don't know if it's the right time to sell it, just because the price has been so depreciated. But at the same time, it might get down even more, because the last time I presented, it was close to 100 and now it's 67. And at the time, we were kind of like, well, we should probably get rid of this. And so I really don't know how to make decisions. And every time I have sold something in my portfolio when I'm not sure, I always have lost. Within a week, it went up 10%. So I don't know. I hate that. I hate that. I finally made the decision to say, okay, take the loss, and they go up 10%. And it's like, why? I have no experience. I don't even follow the company anymore. So I really don't know what's going to happen. I mean, they're doing the job. Management is doing their job. For all the metrics I see, they're doing their job. Their sales are increasing. It's the only thing, and we know why expenses have increased. They're opening new stores. And it seems that they're also doing buyback shares, which also last year was $40 million. That's a lot of money. So probably if I haven't expanded that many stores and I haven't repurchased that many shares, my earnings per share will be the same as sales probably. So it's the club who needs to make a decision.
Do you still feel that it's a good quality company though, with all that you shared?
Yeah, I think there is, I mean, that's the problem. I don't know, because if tariffs are coming, they're telling me that profit, and which makes sense. They're not going to pass all the costs to the customers, so they will be absorbing. So I don't know. I don't want to sell it, and next week everything went up 10%. But
I'll make a comment. Carmen, let me make a comment. On manifest investing, the quality has dropped to 52. It's dropped dramatically.
Very low. It's very low.
It's dropped, but it used to be very high. It's very low. Carmen, I think you've made an excellent discussion, but I would disagree in your opinion of your summary. I don't think the management is doing a good job, because their same-store sales is very poor. The earnings is poor.
But you know what?
They've been building stores all along. They just didn't start. They've been expanding store for years and years and years and years with excellent profit growth, and now they're not. So their profits are down because they're not selling very much stuff. The management is doing a poor job. They actually let go of the CEO in the last year. I think one CEO was fired. And this they have replaced it, but that's just my opinion. I don't think, I mean, their quality is quite low, but anyway, that's my opinion.
Yeah, I'm looking at Manifest Investing, and they're expecting growth at 10.3%, and earnings per share in 5 years from now be 620. The quality currently is 62, which is not above 80. And
What's their par?
par is 8.4.
Yeah. We went
So-
par probably about 15.
We want what?
You went par at 5%, at 5 points higher than the my par.
Yeah. So
My par is probably,
I completely agree with that, but I don't know how many stocks we have that they can do that.
well, I think I have two I know of. I think US Lime looks like a much better purchase at this point. I think Tower and Semiconductor too, but I would certainly consider taking sale of 5 and put it in one of those stocks. I think Five Below has been going down for well over a year now, and it doesn't
I know it
appear
probably
to.
will. It will
Yeah.
probably will, but
Nobody can completely predict the future, but
the club will have to take a decision here.
yeah, okay, fine. I agree with you, Carmen.
Now, looking at the PER report for the club, I see that who are the companies who doesn't have any red on the left side of the report are, according to the SSG that I have, it's NVIDIA, Taiwan, Viva, Google, Chipotle. So those are the ones who are, I don't have the SSG for Chipotle, but just looking for the historical data, earnings per share are high.
How many shares of Five Below do we have?
20.
Do we have to sell them all?
No, we don't have to do anything, or we can sell half. We currently 20 shares, and so let me go back. Let's see how.
Might I say
The twen-
something?
Oh, sure. Yeah, we have $1,350 worth of 5 right now. I'm sorry. Go ahead.
Okay. All right. So, two things. One, 60% of its goods imported from China. I mean, I don't see realistically, even with collaboration that they're talking about, that they can absorb 125 to 140%, even if they absorb 50%. I think there's some kind of magical thinking about absorbing some of that. One, so that on an analytical thing. On a subjective thing, I go into that store in my mall, and I don't find it. I think the management I find is not very good. Presentation is not very good. The orderliness of it's not very good. So I'm not actually surprised that sales are going. I think that depending on how long this tariff thing go, it's going to be very rocky for them. So at a minimum, I'd say maybe split it, sell 10 and keep 10. And coming from somebody who has not performed well on the watch list, I would suggest putting it on the watch list. Anyway, thank you.
Thank you. Does somebody wish to make a motion?
Now, if we sell it, what are we buying?
Well, I think you have to make, those are two separate decisions. I mean, I see we have several stocks, including, I mean, it's the worst stock on our whole portfolio. But we decided on sale, and then we decide, for example, I would buy what Yvonne just presented, for example. You could put all the money into there. Now we have like $889 of cash, plus whatever we get for how much we decide to sell of 5. We could put it in that, or we could put in Taiwan, which is a good buy now, or we could put in something else. But I think you first have to make a decision on a individual stock. 5, is it a high quality growth stock? I think one makes a mistake at saying, well, I'm going to wait for it to go back up, because I can say in my experience, they rarely ever do, and I just watch them go lower and lower and lower and lower. And especially with all this tariff stuff they're performing poorly before the tariffs. So fundamentally they're performing poorly, just not even
Mary,
with the stock price. So anyway,
Mariama, if you put that in the form of a motion, I will second it. Can you hear me? Okay, then I'll make a motion. So I believe that what Mariama was getting at is that we currently own 20 shares of Five Below. I propose that we sell 10 of those shares sell 10 of those shares. Is that good enough?
Ann McNeil, second the motion, Sharon's motion.
So are we opening it up for any more discussion?
yeah, is there any more discussion?
Miriam has a hand raised.
Mariama, are you on mute?
Oh, no more discussion. I think I made my point. Thank you, and
Okay.
thank you for the comments relative to it.
Thank you for your comments. Any other discussion? All those in favor of selling 10 shares of Five, come off mute and say aye.
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 Aye. All opposed? I'm sorry. All opposed? Okay. So we'll sell 10 shares. That should give us $675 more, in addition to the $889. So that gives about $1,564. So now let's go into the discussion. So we have a little more than $1,500. What stock or stocks do we wish to purchase? I give my opinion. I would say
We have 1,500, you say?
yes.
Although it's 675 plus 89, right?
It's 889 plus 675.
889. Okay,
Yeah.
889. Okay, thanks.
Yeah. So I mean,
May I speak?
please.
I'm not a member, but I'm a director of the chapter. And I did post it in chat. Five Below, you have such a small percentage of your portfolio, and now you're making it smaller, and you're going to have a stock watcher. And you know,
I agree.
I think it's crazy. I think it's crazy. And I would, if I were a member of the club, I would suggest that you sell the other 10 shares so that you have a little more money to buy.
I can't.
Thank you for letting me speak. Thank you for letting me speak.
Who is this?
This is Barbara Larson. I'm a director of the chapter, Randall.
Thank you very much, Barbara.
You're welcome.
That was like an angel from heaven talking to us, the guys. But it's our decision to proceed. What else does somebody wish to do? Do we want to consider what you just said, or do we just want to purchase some stock with the approximately $1,500 we have?
So Randall,
Yes.
does that open it up for a new motion? Like if we were to decide?
Sure.
I'm in agreement with Ms. Larson that it's already a small portion of our portfolio. It has been declining for a while. With the current economy, it doesn't look like it's going to get better quickly. And so I would move that we sell all the shares of Five.
Do I have a second?
Ann McNeil, second the motion.
Okay. I think we've discussed this one pretty heavily, but it's up to the members of the club. No, if the vote goes one way or the other, it doesn't matter to me personally. But so let's say all in favor of the motion to sell all of the shares, please say aye.
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 All opposed? Thank you, Ms. Larson, for your experience and intelligence. Okay, so that gives us 1350 plus 89, so 22, 2300. I have to add that up. What does anybody wish to make a discussion on what to purchase with that money? This is an open mic. Anybody can make suggestions.
This is Connie. I think we should purchase more either Google or TSM.
Okay. So we currently own $3,027 of Google. And we currently own $1,365 of TSM.
I have a question before we.
Sure.
The presentation that we heard about the small cap stock. I was really waiting for one of the ladies to make a motion to buy the stock they presented. So my question is to either one of you ladies, what are your thoughts about replacing the money we have for Five Below with the stock you presented?
So this is Yvonne. I really think that Lime is a very good company. I hesitate to make the recommendation because I did the presentation, and in the presentation I recommend a buy.
So since you recommended a buy and you did the presentation, you want to make the motion and we'll second it and put it up for vote?
I'll be happy to do that. I move that we purchase US Lime to replace Five.
Seconded by Mariama.
And how many shares?
I would say whatever funds we have, $2,500.
It is, yeah, it's, I just added it up and I lost it. So it's, let me do it again, 89 plus 1350. It's 2239.
And so that would purchase about 22 shares.
Divided by, what is US Lime Paint?
91.76. So say 92.
Yeah, I'm getting 24 shares.
I move that we purchase 24 shares of US Lime.
Yeah, we're at 24.
I second that motion.
We'll have a discussion. I agree with Yvonne. I also like the idea personally in my account of buying TSM or Google, but in this account, we have what we talked about, 32% of tech, and that's in the higher level. So I would agree with this recommendation to put the cash for US Lime myself. Any other comments? I think your presentation was so good, Yvonne, everybody's speechless.
Well, this is Ann McNeil. I think one of the reasons why I asked her to do that, two things. One, they presented a stock that the sector we don't have much in, and also it's a small cap. So it helps to balance out the portfolio somewhat also. Thank you.
I completely agree with you, Ann. And also they used the stock screener to find it. I mean, it was like they hit all 3 stars. Bam, bam, bam. Very well done. So there's no more discussion. We'll take a vote. All those in favor of purchasing 24 shares, I'm sorry, US Lime, please come off mute and say aye.
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 Aye. Aye.
Aye. Aye.
All
Aye.
opposed? All opposed? That carries. Excellent. 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 So this is the time in the meeting we go to open the mic up to everybody, particularly our guests, to make comments of what they like, what they might think we need to improve on. We'd be glad to listen to any recommendations, especially if Barbara Larson wants to talk some more. But please, please, you're welcome to discuss them.
Hi, this is Cheryl. I thought it was great. I really enjoyed coming to your meetings because I get a lot of insight, and I love the way your groups present their presentations. I think they're just great. Thank you.
Yeah, I thought Felicia and Yvonne just knocked the ball out of the park today. Both presentation about by Felicia about what to do in uncertain times, and then the stock presentation. I completely agree with you, Cheryl.
Hi, this is Deborah, and I also have been in and out of your meetings, but I enjoyed the presentations today. And the U.S., I'm glad Ms. Ann mentioned the purchase, you guys purchasing it, because I was thinking too, well, they just did such an awesome presentation. If they're going to sell their Five Below stock, why don't they purchase some of the U.S. Lime? So I was on the right wavelength. I was just not, I just didn't share it, but I think that you guys did a great job. I appreciate the information, and I'll look into some of the U.S. Lime stock myself with my family until I can join you guys group. But thanks.
Thank you, Deborah.
Randall, this is Barbara Larson again.
Yes.
Excuse my background noise. I'm at the gym. I'm multitasking, which I often do. And I like to pop in to the South Florida Model Club every once in a while. Because as a director, I like to see how things are going. And additionally, personally, I've been looking for small companies. I got the tail end of the U.S. Lime presentation, and what I heard was excellent. And I'm going to do my own stock study and likely buy a U.S. Lime in my personal portfolio. And I thank you for letting me attend and speak and to hear that excellent presentation. Very professional. I mean, I'm very impressed.
We can all applaud the two presenters today. They did an excellent job. Thank you for your comments.
I appreciate your comments.
Hi everyone, this is Raj Satyanarayana. I've attended some of your sessions previously as well, and I echo what everybody else has indicated. I really enjoyed the presentations. I think I agree with Randall. There's a lot of headwinds for Five Below. I don't think that stock is going to flourish anytime soon, especially if the tariffs are enforced.
Thank you. Yeah, I've seen you here more than once. Please feel free to. We like to share because we like to learn from everyone. And I visit other clubs too, model clubs, to listen to what other people have to say. Anybody else? Well, our next meeting is May 17th. Yes, I'm sorry. Our next meeting is May 17th at 10 o'clock, and we can proceed with adjournment. Thank you, everybody, for being at this meeting, partners and guests. These are hard times. Everybody says it's hardest to sell. It's hardest to make good decisions on sell. And I think what we saw today is what everybody has in their own personal portfolio. And it's just hard to make sells. But I think we went through it the better investing way and came up with a logical decision. So thank you, everyone. We'll see you next month.
Have a happy Easter.
Take care,
Happy
everybody.
Easter, everybody.
Have a good week. Good month. Bye-bye.
Bye.
Everyone.